This is the first in a series of reports that we will title Stocks to Watch. In this inaugural report, we will cover 4 stocks, but 3 important topics. Those 3 topics are gold, oil, and U.S. Treasury bonds. The following analysis is a combination of both our trading reports for the ETFs that represent gold, oil, and U.S. Treasuries specifically, and a combination of our technical analysis as well. The goal is to find trading opportunities when tests or breaks of longer-term inflection points occur. The first step in our evaluation process is always to look at our real-time trading reports. GLD is the ETF that represents gold. Therefore, we will request a real-time trading report for GLD from Stock Traders Daily's website. I like to look at the longer-term column when making assessments like this. Of course, we have day trading and swing trading plans available as well, but what's the stock doing on a longer-term basis? What it's expected to do in the weeks ahead? That is more identifiable by using the longer-term data. So in this longer-term column, we have a couple important numbers. Pay careful attention to 158.1. That is support for GLD. Resistance exists a little above 178. We will use this data in evaluating the chart pattern for GLD, which comes next. This is a chart pattern of GLD since July of 2011. This horizontal trend line represents 158.1, which is longer-term support for GLD according to our real-time trading report. I've pinpointed longer-term resistance, 178.59 here. According to rule, we should expect tests of support to hold unless they break. Currently, GLD is testing support. So if support holds, we should expect an increase in GLD from around 158 to near 178 respectively. The risks come in the case that support might break. In this particular case, if support breaks, GLD is actually likely to develop a downward sloping technical pattern. And that would mean lower lows are likely. Instead of a simple decline towards this neutral support level, a continued decline towards 139 is likely if GLD breaks below 158.1. For now, GLD has held after testing this neutral support line, which is longer-term support in our real-time trading report. If it holds, we should expect an increase back to neutral resistance. But if GLD breaks, a rapid decline towards 139 could happen swiftly. Oil is the ETF representing oil, so we will use that in our evaluation just like we did GLD for gold. In this particular example, I want you to look at a few different inflection points. 2 coming from the longer term data. First, resistance at 2391 and then support at 1791. But then also, this time, pay attention to mid-term resistance, which exists at 2233. In this particular example, we might be witness to a breakout and a change in trend, and 2233 may be a catalyst that prompts such a break. Let me show you what I mean. According to rule, we should expect complete oscillations from resistance towards support, given the parameters that are offered in our longer-term analysis in our trading reports. In this particular example, oil declined from resistance, but it has not yet declined all the way to the stated support level in our report. Instead, oil has begun to turn higher. Some would say prematurely. And when this happens, signs of reversal of trend can also surface. What we have here is just that possibility. This trend line, this neutral trend line, represents midterm resistance. If midterm resistance breaks higher, oil is likely to spike higher as well. And it could even start to increase all the way back towards recent highs, at least within striking distance of them. According to our analysis, this is a major inflection point. 2233 makes a difference, and if it remains intact, we're likely to see a decline all the way down to 17.89. However, if it breaks higher, there is likely to be a spike. And our technical analysis tells us that we could see over $25 from oil. Our inflection parameter is 2233. The ETFs representing the U.S. Treasury bonds that we follow are short-based ETFs, specifically TBT and PST. I'm going to let you go to our stock report page and type in PST and TBT yourself to get the data. I'll show you what the charts say. This is the chart for PST. This is the 10-year Treasury. And the bold line here represents longer-term resistance as that is defined in our real-time trading report. Please make sure to go to the website and review this data so you can see yourself. Our report tells us that if this line holds, a decline down towards $25.99, just under 26, is likely. However, our technicals tell us that if this line breaks higher, this trend that we've been used to is also likely to break, and an increase towards $30 is likely instead. We are currently at an inflection point according to our real-time trading report for PST, and that inflection point is 28.17. As you will see, an inflection point also exists in a similar place for TBT, and this is the short on the 20-year Treasury. This again is longer-term resistance according to our report, 67.87. This level again is being tested. If it holds, we should expect a decline down to 52.40. But if it breaks higher, an increase towards $85 is likely. We are currently at an important level of inflection, just under $68 in TBT. I hope you've enjoyed our first installment of Stocks to Watch. We covered GLD, we covered oil, and we covered the U.S. Treasury ETFs, the short base ETFs, PST and TBT respectively. You can go to our website, into the Utilities tab and Stock Reports page to get a real-time trading report on these or any other stock for that matter, anytime you'd like to do so. If you would like me to evaluate a specific stock next time, please let me know by sending me an email. Thank you very much, and I hope you have a wonderful weekend.